Welcome to first lecture on value investing in growing companies. Hi, my name is John and I will assist you through this lecture. So, let's get started. Before investing in a stock market, it is very important to understand why are we investing in the first place? One of the most captivating reasons for you to invest is not having to work your entire life. Bottom line, there are only two ways to make money, by working hard all your life, or by having your assets work for you. But why should we allow our assets to work for us? Why shouldn't we just relax and watch TV all day long without doing any extra work after a 9-to-5 job? The answer is inflation. Let's see, why is inflation necessary for economy? Many economists, politicians and businessmen believe that moderate inflation levels are necessary to drive consumption, under the assumption higher levels of spending is crucial for economic growth. Let's see how. Inflation is a function of supply and demand of money. An economy running under capacity has unused labor and resources that could increase production. The more the dollars, more the spending, which leads to aggregate demand, which leads to more production. If the prices fall for a country being too productive, the consumers would wait for a better deal, lowering aggregate demand and stunting economy. Inflation also helps debtors pay their debts by investing in good investment opportunities that are more valuable in time than their debt. This leads to more borrowing and lending, which increases spending. This benefits the economy. Rising inflation increases prices, which might be a threat for local consumer, who is unable to raise his income with time. This is the very reason we should be investing a small portion of our income so we are able to beat the inflation, maintaining our standard of living. In simple words, with time and inflation, everything in the world gets expensive and it is very hard to stay up to date with our standard of living. I mean, who does not want to wear an expensive watch, drive an expensive car, or live a luxurious life? But we all know many people in this world are unable to live such a great life. Let's look at a fact here. Do you know the richest 1% of the world population have 50% of the world's wealth, and nearly 50% of the world's population live on less than $2.5 per day? These are astonishing facts. It is therefore up to us to work out whether you want to become the member of top 1%, or be part of lower 50%. One of the best ways to avoid this is to invest, and invest wisely at a very young age. It doesn't matter how you do it. Whether you place your money in a mutual fund, bonds, options and futures, metals, real estate, the objective is the same: to make investments that will generate more cash for you in the future. There is a famous saying, money isn't everything, but happiness alone can't keep out the rain. This brings an end to our first lecture. In the next lecture we would be looking at financial planning. Why is it necessary to manage your money? How much percentage of your investments should be in stocks and other options available for investing? Till then, happy investing.